Hi, this is Randy Finney with the right side of the chart, and this is a mid-session or kind of mid-afternoon session update for Thursday, May 23rd, 2024. Going to do a brief update here on the equity markets and really any other thing that stands out. Kind of, same stuff I've been focused on. I did a pretty extensive video earlier today, so I just want to update. Here's NQ, NASDAQ 100 futures. We are still below that trend line. Earlier today, we were back testing it. Remember, we had the what I call the pre-NVIDIA whipsaw right there. That was right before the earnings. We had a breakdown there, snap back up, and now we are below the trend line, or I should say more clearly below the trend line now. Again, the divergence is still intact. Right now, I'm going to zoom in a little tighter so you can see where we're at. There's the candle right there. So came in, back tested it earlier, and there's that rejection I told you I wanted to see off there. Look at ES for you real quick. ES being the S&P 500 futures. And then I'll look at the ETFs for you guys as well. I know not everybody trades the futures. So still want to see that break below 5,300 on ES, but I have a high degree of confidence it's going to come. Let me show you one reason why, and then I'll get to the, I don't know if I had that. There's NQ. I didn't have that chart centered for you, so you can see everything there. All right, let me show you why. And I went ahead and just took a second shot at NVIDIA. I told you yesterday I wanted to add to it on strength or weakness, preferably strength. I got that today. And here's what we have. There's that GDX. I just happen to have that chart up. Clear breakdown there. And I addressed, somebody made a comment about GDX, and I made that clear that pretty much, again, I said it yesterday's video. I just going to reiterate what I said, that didn't have strong convictions for the last couple weeks, but then did all of a sudden yesterday based on more of a deep dive review of the charts. So so far so good, and I wanted to show you something that is interesting, the S&P 500. So NVIDIA, surprise, 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 NVIDIA beat expectations. All right, you can hear the irony in my voice. Up 11%. Let me show you real quick. Hold on, where we're at. NVIDIA is actually up, it's about 12%. And that's where I just took a shot on it here. That's it. I have enough right now for the time being. May add to it. Let me show you why I think this is likely to fail. Number one, we have now, I made this comment, somebody posted something about NVIDIA backtesting a level, and yeah, I could see that in the chart that they did have a line that NVIDIA was backtesting. Asked my opinion on NVIDIA, if anything's changed. Absolutely not. Remember, I was very, very much open to this marginal new high, divergent high. It almost seemed that way in the charts. You had the negative divergence here. You had the trading range, and it's just the history of the stock. So you're up 12% right now. And now when we look at the other formerly known as Mag 7 stocks, not a single one of them was up. Now, guys, I always say one day doesn't make a trend, but you have all six, Microsoft, Apple. You can see the trend lines here on this. This is a daily chart. There's a breakdown there. Let me go to the 60-minute and show you what they look like. There's Apple breaking down, Microsoft breaking, about to. If it breaks that level, it's going to fail this breakout right here. There's a trading range. There's the breakout to highs. As I say, breakouts that occur to new highs with negative divergence and overbought conditions have a much higher rate of failing. So when that goes, it's going to be an additional check mark, if you will, to be short the NASDAQ 100, in addition to the breakdown we had yesterday. And again, yesterday's was a whipsaw, but today we got it again. And that's all that matters now that NVIDIA is out of the way. You know, markets are free to do their thing. So all the others, including Alphabet here, you know, the 60-minute chart, there's your divergent high. Amazon, red also, and this one already put in the divergent high right here, has been moving lower. So you see the rest of the FK Mag 7 stocks are sucking wind today. There's Meta at downtrend line resistance. Meta peaked right here and continues lower. So that's it. So that's all the, and then Tesla was the another former Mag 7 down 2% today. All right, so that's that. Okay, one day doesn't make a trend, but it speaks to what's going on in the market. Again, we've seen fewer and fewer stocks doing all the heavy lifting. You can see the QQQ equal weighted index is still not at new highs. Bearish engulfing candle today. RSP, the equal weighted S&P 500, is also well off the previous highs. Remember, we had this sell signal back here. That was when we shorted a QQQ before, right around that time there, to swing it to. Actually, it was, we had one at the highs too, but we had that same wedge. And RSP hit that. That was a target I had on RSP, covered in previous videos. 158.84, very good support. It was the top of this trading range, bounced. So far, we failed to make a new high, and we just took out this minor downtrend line. But let me show you something interesting, guys. So years ago, I came up with what I call a real-time breadth indicator. I've shared it many times. I'm sure others are using it now, or maybe others figured it out before I did. I don't know. But what I do is, and again, it can only do this, at least it's easy to do with this charting platform. I'm moving my screen over. These are the components to the S&P 500. And so if you put up a percentage gain or loss column on it, and this is a thing, guys, I can do, and this has never been offered before. In the past, all you had are breadth indicators, the advancers, decliners, and it was typically done on an hourly or half-hour basis, and only for a couple indexes. You had NYSE and the S&P 500. You didn't have one for the NASDAQ, especially not just for QQQ. But you can do this with any sector, any index, any ETF that shows the components here, and all you have to do is sort. And you click and you sort by gains, and then you go down, and you can see here, as I scroll down, they're moving, so I got to do it again real fast. And some reason this one's not filling in, but you can see there's flat, flat, positive, positive. I'm going to click about right here, Regeneron. So that tells me right there. And I did it, and I posted this recently. It's about 50, right now it says 72 of the 503 items in there are trading red. I'm sorry, green. And that gives you, what is it, about 18%, I think, are green, and the remainder are red right now. That's horrible market breadth. You're talking, less than one advancer for every 4 decliners right now, or 4 decliners plus in the S&P 500. That's very, very poor negative market breadth, meaning there's a lot of selling going on today. And again, if you look at the NASDAQ composite, or the NASDAQ 100, it looks like things are okay. With the, it's green right now, but barely. And again, when you look at everything else, what I just showed you, including and not limited to the S&P regular, the regular S&P, which has NVIDIA in it, skewing those numbers, is down 0.3%. RSP, the equal weighted, is down 1%. QQQE, if you strip out the impact, the overweighted impact NVIDIA has, you're down 0.7%. So again, I'll say this one more time. I know I'm repetitive. One day doesn't make a trend, but it kind of shows you what's happening in the face of what was already, some pretty clear negative divergences. And then on that, and this is kind of what I mentioned in the video yesterday with the gold mining stocks, and last time I threw out a trade idea, short pullback trade on the GDX, the metals. And I also, even at that time, if I recall, didn't have super strong convictions then. And of course, recently, and I told you I stopped updating it. Last update, we hit the third of these first support levels, said we have to take that one up to open the door to more downside. And then again, I updated yesterday. So again, this trade, I'm trying to remember exactly where I threw it out at. I think it was there. It might have even been on that thrust up to the highs. I'd have to go back and reference it. But so my point is, if you were targeting, I had some deeper targets down here at the time. And if you were, that could still be an active trade, very much. So there's, these whole categories, the categories of trades I have. I should say, I'd like to say I do my best to keep up on them, and I don't, because I do these videos every day. I post updates every day, what I'm watching. I kind of move on to the next thing. And again, if you want an update on anything, I'm glad to do it. I just wanted to say that this could be considered. Yesterday made it very clear my convictions were high. So it is an active trade. It's an active short trade. It triggered all the criteria I wanted to see after posting it as a setup yesterday. I even told you personally I had enough conviction that I started taking positions in anticipation that it would break down. Took them ahead of time. And so what did we go? We went up 6%. And I think the last target on the previous one was down here, which is 17%. So, there are folks that may still be in a GDX short. So is it the same trade? Is it a new trade? Semantics, really. Again, I use different entries personally. I know many others do. I just wanted to say that. So all I can tell you is whether it was or wasn't, whether you want to consider it stopped out or an active trade, what I posted yesterday is the most recent update and analysis. So I always say this, the charts are dynamic, meaning they're constantly changing, and therefore so is my analysis and my conviction. So I can go from, me, bullish one thing to bearish the next day. I told you recently I closed out my natural gas short. And I also now am short natural gas. I want to share that because I got my head bit off yesterday. Not bit off, I'm just kind of kidding. Somebody was upset that I said a day after I sold wheat, closed out wheat, that I actually disclosed on the site. Even though I'm still longer term, it looks good, but near term, and I've already covered that one quite a bit. But again, as I said, wheat was exactly where it was. In fact, it was a little higher yesterday when you look at the daily. Oh, I forgot to move this back over, guys. All right, there's wheat. That was yesterday when I said, and there was a previous candle. So we actually went even higher yesterday, and we're still where we were. So it hasn't really done much. It's consolidating here, but I'm still holding off. And a couple people have asked where I want to buy back, and I already covered that. And maybe if we get back down here, I'm just kind of lightening up a little bit on the ag commodities now. But I did short UNG or natural gas. I actually shorted it yesterday. I added to it today. Why am I short natural gas after being long and bullish? A couple things. You can see these divergences here on the 60-minute chart, and more so I like the future. So let me show you that chart. Okay, this is that longer term target that I told you I still think it has a good chance to go up to, but it's been a pretty healthy run to say the least. Off the lows, remember that's where we had, we're buying it down on the lows, multiple entries there. I like that as long-term support. We're up 53% into these highs right here recently. And this is the daily chart. So you can see we're even getting some divergence now shadowing through on the daily right here. No, this is 8 hour, my bad. 1 year, but 8 hour candles. And so there's divergence there. But here's the main reason. I've been using a lot and showing you these 60-minute charts. This is a 120-minute, meaning every candle's 2 hours. T1 hit, there's the long-term support. T2 hit, T3, T4, T5. And now you can see we have divergence here as well. We had it then, it didn't play out. Remember early on, I even talked about that. We were just fresh off the breakout. And so natural gas doing what it does, can burn through divergences. And that was a great example. But we got a pullback. So you're able to game if you were an active trader. Pull back off T3, went up. But look, 53% return. Again, maybe at the very least time to book profits. Here's an uptrend line. It's probably going to hit and bounce off of. But that's the negative divergence there you can see on the 2 hour chart. And here's a 3 hour chart here. So you got a little more downside. It's probably going to come into about right here before we bounce. And that's where I'll cover. And whether I'll go long or not, I'm not sure. This is pretty steep divergence. I may just stand aside, let the dust settle and wait for see if I get a better re-entry point or if it can consolidate or do some, give me a reason to buy it back. Just had a price alert on XLF as I'm talking to you. Actually, this was a different type of alert. This was a PPO crossover alert. So let me pull that up. I showed you earlier today my watch alert list and how that works. And on this one, I actually had a daily. It was a daily chart. So I highlighted the financials recently, including the regional banks. And on XLF, these are the big financials. These are your JP Morgans of the world and Citibank and Visa, MasterCard, Bank America, Berkshire, Wells Fargo, all that stuff in here. Those are your top components. And so what I was looking for, I've always make up a lot of terms in trading and investing. And one of those is unconfirmed versus confirmed divergence. And again, I like to see when you have negative divergence and, prices are moving up, That's not a sell signal, it's just an indication. What you need is a sell signal, such as a trend line break, which you got right there. And then you need to see, or I need to see, or like to see the PPO make a bearish crossover. So momentum has turned and we've now rolled over, and the PPO, that's the alert I just got as I started this video. I don't know if you guys heard the little bells going off there. The volume is not very high. And so it tells me we had a bearish cross on the daily. Now the day's not over, it could bounce back, but right now that is what we have. And so then that does, at least at this point, especially if it's confirmed on a daily closing basis, gives me a check mark there, because now this divergence, remember, this is a, again, what I call a marginal new and still divergent high, overbought conditions here, negative divergence on both the PPO up top and RSI, sell signal in the breakdown there. Again, that's what you need. You don't always just short divergence or buy divergence if it's bullish divergence. You want to buy a breakout of, buy a pullback to support, go long on a pullback to support, or a breakout above resistance. And so this is a daily chart. This isn't a 5 or 15-minute chart. So what does this tell me? Well, it tells me the last time we had a divergent high on the daily I had was right here. We had one first, just like we had one here. That was a divergent high. And what did you do? You got a shot across the bow, little kickback rally, make a slightly higher high, and then we went down. That's what happened exactly right here. We had negative divergence to this point, got a shot across the bow. After that, this uptrend line break right here, we broke the trend line, kicked up, made a marginal new and still divergent high, and then we had an even bigger drop. How much was it? It was 18%. So looks to me like this one may just be getting going. We'll see. So going back to NVIDIA. Okay, why did I'm starting the video right after I decided to take up to it's a comfortable position for me now. I'll call it a full position. Okay, why? Because if and unless the other things participate and start coming up and they go on to make new highs, no matter how good this company is. And listen, I'm not bearish on NVIDIA because it's not a good company. It's not making ass load of money. Obviously it is. They have more business than they need. Their margins are super high. It's a cash cow. The problem is they are, first of all, overbought and overowned. You look at, P ratios super high. They got to keep that growth rate up. There's all these concerns already. And I'm not going to get in the fundamental part. I listen to the headlines, listen how China's slowing down. And the CEO said he probably figures another 5, maybe 6 quarters of be able to sustain these super high margins before they start coming under margin compression, competition coming in from others. Doesn't matter. That does matter ultimately in the long run, but in the short run, what matters is inflows, outflows. So if these other former Mag 7 stocks continue to move lower, fail to build on their gains. Again, a lot of them already stalled out and are at or below their previous highs. Microsoft, Apple, Alphabet's the only one just coming off new highs there. Amazon still off the highs, and of course Meta still well off the highs, and of course Tesla way off the highs. So my point is, so if those charts are already showing potential early signs of rolling over, and again, just there's a huge difference of a stock coming down 4 or 5% in an uptrend. That's just a regular. When it does it with negative divergences that have been building for months now, all the way from the 60-minute chart out to the daily and even the almighty weekly chart. The weekly charts are kind of long-term, paint a bigger picture. But they take a long time to play out, these positive and bullish divergences. Usually the positive divergences play out faster. That's just typically what I've seen happen. And one reason is stocks correct faster. They fall faster than they rise. So typically you get the divergent lows like you had back here, and that's it. And they can span over just a few months. You can see the time frame. Whereas the negative divergences tend to span over many months, 6 months, sometimes even a year or more. That's not unusual. And so again, that's the weekly chart. And so for those of you, and I know there's some out there that love the little ridicule, marginal new tide, another time to short. Yes. And when I start seeing weekly divergences and daily divergences, even as an active trader, you can gain little pullbacks on 60-minute charts in an uptrend. Just like in a downtrend, I'll gain 60, bounces, counter trend bounces, short covering rallies with positive divergences on the 60. But you don't position long term until you have more evidence of a bottom or very good long term support level. Love to see those positive divergences, oversold conditions, especially out on the daily and weekly time frames. So that's what we have now. And so again, don't, if it's not your thing, don't trade them. Move on. I've been sharing a lot of other trade ideas. And so from the naysayers that joke about these divergent highs and wanting to short the divergent highs right now and the trend line breaks, that's fine. That's fine. But as long as you can say in those same breath, hey, you know what? I would have, I took it and it failed and I'm a little upset, but I offset it with that, I caught a good part of that 50% rally in natural gas. I caught a good part of the, 20 something percent rally in wheat. I was like you did, Randy, I, hedged up with TLT right off the lows right here. After we hit T2 on that QQQ short, or I also covered the QQQ short like you did and gained the good part of the first part of the bounce. So I don't hear those things. So this is how it is possible to continue to take these shots on the short side. And even if some of those get stopped out, especially if you're hedged while doing it with the proper hedge. Remember, I've said this many times, I'm not a big direct hedge guy. That's what I believe the options market was created for initially. So, institutional traders could hedge against, a pension fund or a hedge fund could hedge against if they were long and bullish Apple, Microsoft, Nvidia, all these things. They could buy puts on the QQQ or on the S&P 500 to protect, cushion their downside, give insurance against a big drop in the market. But then they became, a lot of people now just use them as pure play trades. But where I was going with that is, you've heard me say, I don't like that. If I have low enough confidence to be I'm going to move this trend line, guys. I'm just talking to you right now. I'm seeing a potential. I might tweak this trend line. This is what I do. I'm sitting there talking about hedging. But okay, so let's say I'm long XYZ, but all of a sudden I don't just have a strong enough opinion to be in it, and I think it might even go down. So instead of buying a put option on XYZ, I'll just sell the thing, because if I buy the put option, I got the expense of that. If it drops, I'm going to, be protected somewhat, but I'm also going to have lost money on buying that option. And it's a one-to-one wash. So I like those indirect hedges, and lately been firing on all cylinders, be it TLT or the USO short. When that was up there, I said, hey guys, USO's negative divergence. I forget where exactly that was, up here somewhere. Yeah, it was right here. If you were short the markets at that point in time, you could also short crude, because if crude drops, that means inflation's going down, and then stocks will probably rally. So the gains that you'll get from a drop in crude should help offset, maybe completely, maybe even more than completely offset any givebacks. And again, whether you're a long-term swing trader, trend trader that's still short the Qs and still holding out for those targets, which I still continue to maintain. And it kind of goes back to like that GDX trade that someone mentioned. Is it the same trade? It may be for you. It may not be. It's certainly not for me. I tell you almost every day what I'm doing, especially on the active stuff that I'm covering every day, like QQQ, made it very clear that, hey, even though I think we're going down to T3, T4, and T5 here, at least T4, still a sweet spot. Made it very clear that to me there was a good chance for a bounce, and I was going to go long, and which I did. So, even gained things in here, but that was 8%. That was another 2 plus fully. And then somewhere in here is where I took the TLT hedge, which I went over more than offset that. So, guys, that's how. You might not always be on the right side of a trade or a call or a trend. And if that's all you're doing, if that's all you're trading, if you only trade QQQ or SOXX or wheat or corn or soybeans or anything things I'm covering, you know, when you're right, you're going to be very right and very happy, especially in the volatile stuff like natural gas. And when you're wrong, you're going to be really wrong. So, and I say that again because there was a comment on there when I talked about, you know, having, you know, my bet spread. And Jesus, if I haven't made that clear, if I don't make that clear in all these videos, then I don't know what else to do but you know, paste it on, you know, bold letters in the front of these videos. All right, I'm going to move on to, let me just cover a few other things. So, all right, so there's QQQ breaking below. This is the uptrend line I gave you yesterday. There was that pre-NVIDIA breakdown. There was the post-NVIDIA earnings, well, whipsaw rip up in the market. Order imbalances at the open, everybody getting giddy. Then the follow-up breakdown, and that's where we were earlier today in the video. And I said I wanted to see a rejection there, which I've now gotten, and I have a pretty high degree of confidence based on what I showed you before with the extreme horrible market breadth, the decliners outpacing advancers by a wide margin, that the S&P is going to go ahead and give up the ghost on those levels. That's, well, there it is, done, boom, check. That's it, guys. Not much else to add on that. Green lights on the index shorts right now. Green lights on the metals and miners, and natural gas. Not a whole lot more to go, but I'm more looking to, like I said, cover soon at that trend line support, and then I'll, you know, most likely be getting back in, but I don't mind standing aside for a little while. That's what I'll do if I don't have a high degree of confidence. I won't re-engage a trade. RTY, small caps, that's right here. I threw this one out to you the other day with the index futures charts, and there, you know, rejected. Now, boom, broke that trend line. Now, boom, broke the 2061 level as well. Opens the door to this next target here. And so this is not mere coincidence. I'm going to just kind of dragging along here to get to NVIDIA. So I started the video with NVIDIA, and here we are. It's not much, but there's the turn right there. Why has that turn come? Because the S&P 500 is now broken down. NASDAQ tried to regain that trend line, got rejected. And so it starts to become clear the sell orders hit. And the way this works, it's simple mathematics. It's an immutable force. More sellers in QQQ and NQ, the NASDAQ futures, and the S&P 500 and those futures mean that they have to then, you know, proportionally sell what they have. And they have a lot of NVIDIA. So NVIDIA will get dragged down, if I'm right, kicking and screaming if the rest of the Mag 7 and the rest of the market goes down. The only way the rest of the market goes down, it's simple economics 101. More buyers and sellers, the security goes up, or the price of anything goes up, whether it's a loaf of bread or an ounce of gold. More sellers than buyers, the price goes down. And then you know, some of those top components can hold out for a while, like NVIDIA, with overwhelming demand today when it was up, you know, what was that when we started the video, 12% at the high. And then ultimately they'll start to sell and it will probably snowball. So you probably have as much, if not more, downside now because, again, the charts are just set up nice. You get the divergent high right there, marginal new divergent high. Something just happened. Oh, the wrong time frame here. There we go, daily. There it is. Divergent, still marginal, new high. Weekly chart. Nothing's changed on the weekly. You know, nor could anything change on the weekly anytime soon. I talked about that yesterday. I was fully prepared to see, you know, up to a 20% pop. I just said anything more. I didn't think we'd get a full 20 because, again, it's the weight of a stock, $2.4 trillion market cap now. It's, you know, not as easy to go up and down 20% as much. So, oh, and then old Mr. VIX. Let's check the VIX. So I followed up with that yesterday too. This is when pre-NVIDIA earnings, exactly when the NASDAQ 100 broke down. And I highlighted that. We had the breakout. We hit the top of this. You had this trading range here. It gives you a top of that at resistance level at 13,883-ish. And then, of course, NVIDIA reported. VIX went down. and then it proved to be a one hit wonder, short-lived wonder at the open for the Nasdaq. Again, Nvidia kept going up, everything else kept going down, and including all other 6 in the Mag 7 stocks. So basically it was a whipsaw, and again, to be expected in front of earnings, as would be the subsequent move. But this is the direction the VIX has now chosen. It's now back tested, had another breakout, but we're at resistance. So I would wait, and I'll be waiting for a break above this and a break for the next support levels in the market and SPY and ES and NQ. And then if they happen with this, then we pop there, and here's where we go. We go boom. This is a more of a target zone, you can call it, or each one there. I just refer to as a target zone when you have 2 resistance levels or support levels in close proximity. Now the VIX, the way this thing works is when it wants to run, it really runs. So you probably blast on through these earlier levels, and I told you I'm still targeting. If the breakout fails, and this breakout in QQQ, the recent marginal new high, and we go back down, and especially if we go down to hit my preferred swing targets, on the 60-minute and daily chart, I'm talking about that T4 level. We have T3, T4, and T5 all close together around the 200-day moving average. This thing's just gonna rip like that. It's going to go up there fast, and it'll probably blast right on through there. And then it's just a 3-month chart. Hourly candles. Then at that point, I go out to the daily. We'll look at the spot VIX, and which I've covered recently. This is a long-term support still. Nothing's changed. Mentioned this. This is the divergence. I covered it the other day. 1150 is the top of this long-term support zone. I covered it on the daily for you right there. Top of that support zone at 1150. And that was it. This was the last time we got there. Divergent low. That's when we went into our QQQ short, and I highlighted the VIX as a trading op too. And QQQ went down to hit T2, and it hit T2 right here. I even went so far, and this is where I kind of get a little annoyed too when I get these comments about the trading plans. I even did a detailed thing on the VIX telling you that the VIX will usually bottom first before the stock market. And so I'll close my VIX longs a little bit before I'll close my NQ shorts or SPY, whatever I'm trading at the time. And that I believe was the case then. Let me double check. So when did we hit QQQ? QQQ T2 was hit at right before the right around the close. That was on April 19th, and the VIX. Oops, that's not the one. VIX bottomed. The VIX peaked on April 15th. And you can see on April 19th, it made a slightly lower low. And I talked about this in advance. Someone asked, I got nitty gritty into my VIX trading plan, and this is from my experience. And you can go back, and it's simple. You can look at any point in time when the market bottomed, at major bottoms, either during corrections or bear markets, the VIX always peaked first. So that kind of factors in my trading plan. Kind of get in early, or get in when the markets break down, but get out early, and then, boom, once you're, you can even go so far if you're bold enough to short the VIX, once the index has hit your price targets. Again, the price targets that you think will produce a reaction. And again, this is where I cover this in these videos, and it's as if some people don't listen to these videos where, I state how I'm going to trade. Hey, T1, we're coming up. I don't think we'll have much of a reaction. I'm going to sit tight because it is a first target. Some first targets I will reverse and game a bounce, and this one, based on the fact there was a huge trading range here, very well watched, and a little bear flagging after we broke down. I figured we'd go have very little, if any, reaction, and then T2 we'd get a reaction. So those are the kind of things you have to pick up in these videos. This is why I don't put a simple, what somebody recommended today, a simple buy this XYZ now at this price, sell it at this price, because it's not that simple, at least not for me. So anyways, that's where we're at. The day is young. No, the day's not young anymore. The week is young, and we're only down. Now QQ's turned red. So it's believe me, it's not a, all-in moment yet. It'll start to get better. The short case will get a little more check marks when we fail this recent breakout. That's the break above this trading range. That's 449. ish. We break that, then you have an uptrend line here. That will be another powerful signal, as would a break of that, another break back below 433. And then a break under T2 should be lights out. A break under T2 should be almost a guaranteed. We'll get to T4, and I'll also tell you we'll probably get there very quickly if and when T2 gets taken out. And T4, again, on the daily chart, it is right around, or now T3 comes in. See, this is the other thing. You know, over time, the 200 days are coming in now. Remember, back here, they were closer to T4 when we had this trade over here. And now, as time goes on, the 200-day moving averages have moved up. So what does that mean? Okay, right now, I'm leaning more towards T3. Again, if and when we get there, where I'll likely look to be gaming a bounce. But at that time, I'll be looking at many other things, including but not limited to the S&P 500. Where's that at? Does it look good? How oversold are we? What kind of divergences? What are the market leaders doing? What are treasury bonds doing? What are crude and other inflationary commodities doing? All that will go into, and that's just if and when we get there. So let's see what happens. As of now, we have a bearish engulfing candle here, potentially forming on QQQ. So we'll see how we end the day, and then if we do get it, I like to see follow up the next day. I like to see, as I like to say, the redder the better after a bearish engulfing candle. Those are potential topping sticks. And I will say we've had quite a few in recent months, including not limited to Nvidia. And that one so far didn't work out. That was a bearish engulfing candle. You know what? In a way, it did, because if you want to measure it from the top of the bearish engulfing candle to the recent lows, that was a 22% drop. Although it wasn't considered a trend reversal. It was more of a correction. 22% would be, many would call it a bear market, but that's an antiquated measure, and that's really, you have to look at every index or security different. 22% is just a pullback or a correction in NVIDIA due to the scope of the, current trend. So, all right, guys, in the levels, they remain the same. You have this uptrend line right here. You have the top of the trading range, 970, and this uptrend line. These are the two biggest levels that NVIDIA should hold on a backtest. That's where the buyers, if we backtest, should come in. If they drop, which I think there's a decent chance, especially if the indexes continue lower and the rest of big tech, then that should send us down back to this uptrend line right here, back down to the bottom of the trading range around 840 in this uptrend line. And then that's even a more powerful longer-term sell signal if and when we get that. We're looking 5 steps ahead right now. NVIDIA is still the strongest on the board today. So I don't want to spend too much time on it. And it almost seems like I'm hyper-focused on it. But that's only because I do believe it is the single most important stock, bar none right now, in the entire stock market from just a whole sentiment perspective. Remember, everything that's been fueling the rallies in the other Mag 7, Microsoft, NVIDIA, or Microsoft, Apple, Amazon, Meta, I should say, and Alphabet more so. That is all things AI. And so we'll see. All right, I'm going to wrap the video, but I haven't updated this one in a while. But for those that do believe, remember, it tends to follow NVIDIA. It's, coattails, SMCI. We had a sell signal here. I actually first posted short it right there. It was kind of a gut shot on a kind of blow off top rally. That's where I had an initial short, and I finally ended up covering it, and then got back in. And but this is where that's where I'll take it to a full position under 690 right there. 690 has good support, and that's still the sole price target. And some might still be in it. Like I said, it's still profitable. And then I mentioned this breakdown here as well as an objective short entry. That was the rising wedge. And so like a lot of things, it's not going down much. I mean, in percentage terms, it's already dropped off the highs, 43%. It's just, again, shows you the scope of these moves. But more so, it's kind of just going sideways and will continue until the king dies, and the king being NVIDIA. And so you could trade this as a proxy if it takes out 690, or if you want a pot shot. Look, I could tell you right now, I took a pot shot on NVIDIA today. With adding to it. and even taking a little bit right before the earnings. But there it is right there. You have a couple reaction highs. Might be able to take that line across. You could take this one with a pretty tight stop right up above it. And yeah, you could say that trend line there. And you can see I have a support zone. So you could take a shot here and or wait for this level to go right here, about 800. And then that would kind of be maybe an all-in there under 690. You got the 200s here, and it'll probably hiccup if it does break down halfway along. But I think this one carries down to that 355 price target I have and have had for a while. And just to put it in perspective, if hit, that's still about a 60% or so drop from where we're at now. But it's probably not going to get there unless NVIDIA comes back in and starts to roll over after whether it's today, tomorrow, next week. All right, guys, I'm going to wrap the video here, get it out to you. Again, I've been covering the same stuff over and over, but pretty frequently. So got a lot of updates, got a lot of things you can consider. Watch the levels on the main indexes. That's going to be most important. And like I said, if the QQQ and SPY continue to go down and take out one support level after another, it just increases the odds. If and as each level is taken out, that this selling pressure, more people sell the Qs, and then the more QQQs being sold, more shares of NVIDIA are being sold proportionally to that, and probably blew out the last of any remaining shorts other than me today on the pop up. So we'll see what happens there, because when you clear out short interest, that's no bueno for a stock. So stocks that have a good deal of short interest tend to get buoyed up on corrections because those short sellers tend to come in and cover on the pullbacks. But when you blow them all out, if you don't have the long stepping in to buy it, if everybody's long NVIDIA right now, the last hedge fund and last mutual fund has bought his or her share in the last pension fund, and you don't have, sometimes that's what happens. Great stocks top on great earnings quite often, and people don't understand why. Until months later and the stock's down 40-50%, and then Kramer starts coming out and telling you why, you should have known that this was happening, why, hindsight crap that does you no good. So all right, guys, I'm going to wrap the video up here. This has been Randy Finney with Right Side of the Chart. Have a great day.